Hey everyone, welcome back to Corporate Decoder. Get ready for a financial deep dive that might just make you feel like you are in the nosebleed seats of executive compensation. We're peeking behind the curtain at Madison Square Garden Entertainment Corp with their latest proxy statement. This isn't just about numbers, it is about how the folks running the show are being rewarded for it. What story do these executive pay details tell about the company's health and its future direction? Before we dive in, if you love getting straightforward insights directly from these filings and want to understand the real money behind the headlines, make sure you hit that subscribe button. Also, you can join our growing community on Discord. Link is in the description below. Alright, let's get this decoded. This is all about Madison Square Garden Entertainment Corp, or MSG as they are known. They are putting out their proxy statement for their annual meeting. Think of a proxy statement as the annual report card and shareholders guide all rolled into one for key decisions. This particular document, filed on the 24th of October 2025, is laying out what the company wants stockholders to know and vote on for their upcoming the 10th of December 2025 meeting. This filing is a definitive proxy statement. That means it is the final version being sent out to shareholders to get their votes in order. It is not preliminary, and it is certainly not just for the Commission's eyes only. The heart of this filing revolves around approving the board of directors, the financials, and importantly, the pay for the top executives. The company is asking shareholders to vote for electing directors to ratify their accounting firm, and a big one, an advisory vote on executive pay. Let's look at who they want to keep steering the ship. There are 12 director nominees in total. 3 are for Class A stockholders and 9 are for Class B stockholders. This split is important because Class B stockholders, which are largely controlled by members of the Dolan family, have significantly more voting power. This dual-class stock structure means certain people have a much larger say in who gets elected and how the company is run. It is a common structure in some older companies, and it means that while all shareholders get a vote, a select group can essentially decide the outcomes. James L. Dolan is listed as the Executive Chairman and Chief Executive Officer. He's been in this role for the company since December 2022, and has a long history in the entertainment and media industry with various Dolan family companies. His extensive experience chairing and leading multiple public companies like AMC Networks Incorporated and Madison Square Garden Sports Corp makes him a key figure. His background is packed with leadership roles in companies like Cablevision and its programming arm, which eventually became AMC Networks. This deep industry knowledge is highlighted as a key reason for his continued directorship. Martin Bandier is another Class A nominee with a wealth of experience in the entertainment industry, having led Sony ATV Music Publishing for years. His background in music publishing and his long-standing board roles are noted as valuable assets. Donna M. Coleman is also a Class A nominee and a strong contender with her financial leadership experience. She has held high-level finance positions at AMC Networks, Madison Square Garden Sports, and Cablevision. Her experience as Chief Financial Officer and in financial planning makes her a critical voice for financial oversight. Charles P. Dolan is a Class B nominee and represents a younger generation of leadership within the Dolan family structure. His familiarity with the company's business and his ties to the founding family of Cablevision are explicitly mentioned as key qualifications. Marianne Dolan-Weber, a Class B nominee, brings experience from her roles in family foundations, and as a director at various related companies. Her background includes leadership positions in family offices and foundations, which are highlighted to showcase her business acumen. Paul J. Dolan, a Class B nominee, brings leadership experience from the sports world as Chairman and Chief Executive Officer of the Cleveland Guardians Major League Baseball team. His extensive business and management background, particularly in sports and media, is seen as a significant asset. Quentin F. Dolan, a Class B nominee, is noted for his roles within Madison Square Garden Sports Corp and his familiarity with the company as part of the third generation of founders. His focus on player performance and science suggests a modern approach to management. Ryan T. Dolan, another Class B nominee, is highlighted for his work in interactive experiences and his deep connection to the founding family. His role in developing interactive gaming initiatives shows a forward-looking perspective. Thomas C. Dolan, a Class B nominee, has a background in strategy development and information technology from his time at Cablevision. His experience in various executive roles within Cablevision and its related companies provides a solid foundation for his board service. Frederick V. Solano, a Class A nominee, is a seasoned director with extensive experience in finance and telecommunications. His past roles at Verizon Communications Incorporated and his board positions at several other public companies underscore his financial and governance expertise. Brian G. Sweeney, a Class B nominee, has a strong history in executive leadership and operational roles at Cablevision. His experience as President and Chief Financial Officer offers valuable insights into the company's operational dynamics. Claire D. Sweeney, a Class B nominee, is the youngest on the list, bringing a fresh perspective. Her background includes internships at related companies and a focus on arts administration and music business, indicating a connection to the entertainment industry. Next up is Proposal 2. The ratification of the appointment of Deloitte and Touch LLP as their independent registered public accounting firm. This firm will be auditing their books for the fiscal year ending the 30th of June 2026. Having a reliable auditor is crucial for transparency and investor confidence. Looking at the fees for Deloitte for the fiscal year ending the 30th of June 2025, they charged about $988,000 for audit fees and another $25,000 for audit-related fees. For the prior year ending the 30th of June 2024, the audit fees were around $885,000. The increase in audit fees likely reflects the company's growth or perhaps more complex accounting needs. The audit committee, which is made up of independent directors, has reviewed the financial statements and the auditor's work. They are responsible for making sure the company's financial reporting is sound and that there is good internal control. It sounds like they are satisfied with Deloitte's independence and performance. Now for the part that always gets a lot of attention, the executive compensation. This compensation discussion and analysis section is where they explain how they pay their top executives, named executive officers or NEOs. We have James L. Dolan, the executive chairman, and chief executive officer David J. Collins, the chief financial officer, Laura Franco, general counsel, Philip G. D'Ambrosio, treasurer, and Laith Tucky, controller. They also mention former NEOs Michael J. Grohl and Lee Weinberg, whose compensation for part of the year is included. Last fiscal year, ending the 30th of June 2025, the company reported revenues of $942.7 million and operating income of $122.1 million. Adjusted operating income, or AOI, was $222.5 million. That is a pretty good financial showing. They also had a record-breaking run for their Christmas Spectacular show, bringing in over $170 million. They also secured new marketing partners like Lenovo and renewed deals with Verizon and Pepsi. Financially, the company seems to be performing well. The company likes to say they link pay to performance. Their compensation principles are pretty standard 3 key ideas. First, a good chunk of pay should be at risk, meaning it depends on performance. Second, long-term rewards should matter more than short-term ones. And third, executive pay should align with shareholder interests through stock-based compensation. They feel this structure helps them attract and keep top talent in a competitive industry. One performance-linked description-based salary cash fixed level of compensation determined primarily based on the role, job performance and experience intended to compensate NEOs for day-to-day services. Performed annual incentive cash initial funding based on financial performance measure. ROI, which initial funding level can be modified based on business unit strategic, operational, and financial, collectively referred to herein as strategic objectives performance-based cash incentive opportunity, designed to be initially funded solely based on the achievement of determined financial performance measure, or approved by the compensation committee performance against predetermined business unit strategic objectives, can modify initial AOI funded pool within specified range long. Term incentive performance stock units, 50% total company net revenue, 50% financial performance targets are determined by the compensation committee to incentivize strong execution of our strategy and long-term financial goals cliff. Vest after 3 years to the extent that financial performance targets measured in the last year of the 3-year period are achieved business unit AOI, 50% restricted stock units, 50% stock price performance stock. Based award establishes direct alignment with our stock price performance and stockholder interests, vest ratably over 3 years. Their compensation for the year ending the 30th of June 2025 is broken down into base salary annual incentives and long-term incentives. The annual incentive is tied to adjusted operating income or IOI, and long-term incentives use both revenue and IOI performance. They also use restricted stock units which tie executive wealth directly to the company's stock price. Let's dig into the actual numbers for 2025. James L. Dolan earned a total compensation of over $14 million. His base salary was $1.5 million, and he got a $3 million bonus. The bulk of his compensation comes from stock awards valued at over $9 million. David J. Collins, the CFO, earned about $1.07 million. Laura Franco, the general counsel, earned about $1.87 million. Philip G. D'Ambrosio, the treasurer, earned close to $2.85 million. Laith Tucky, the controller, earned about $2.08 million. Even Michael J. Grohl, a former NEO, received over $4.4 million in compensation, reflecting his tenure and eventual separation package. Lee Weinberg, another former Neo, earned over $1.6 million. This all other compensation column is interesting. For Mr. Dolan, it includes about $330,000 primarily from perquisites like car services and aircraft use. For Mr. Grohl, it includes a large separation payment of $2.8 million. These payouts for people leaving can often be substantial. Looking at the awards granted in 2025 for long-term incentives, Mr. Dolan received stock awards valued at over $9.2 million in performance stock units, at target with a grant date fair value of over $4.6 million. These are significant amounts clearly aiming to tie executive fortunes closely to the company's stock performance and long-term goals. Other executives also received substantial awards reflecting similar alignment strategies. As of the 30th of June 2025, James L. Dolan has outstanding equity awards that have not yet vested and are quite substantial. The market or payout value of these unearned shares units or rights is over $20 million. This shows a large stake in the company's future performance tied to these executives. Now for the pay versus performance section, a required disclosure that shows alignment between executive pay and company performance. For 2025, Mr. Dolan's compensation actually paid was over $16 million, while the average for non-PEO NEOs was about $2.5 million. Compared to an initial $100 investment, the company's total shareholder return was about $128, and peer group return was about $117. Their adjusted operating income, or AOI, was $222.5 million for 2025. While their pay is high, their performance seems to be keeping pace on some key metrics showing a connection between their rewards and the company's results. The CEO to median employee pay ratio is a significant 567 to 1. Mr. Dolan's compensation of over $14 million compared to the median employee's $24,985. This massive difference highlights the vast gap between top executive compensation and that of the average worker, a common theme across many large corporations today. This brings us to Proposal 3, the advisory vote on executive compensation. Last year, about 98.8% of votes were in favor of their pay structure, and this year they are again asking for stockholder approval. They believe their program effectively aligns NEOs with stockholders by tying pay to company performance and offering competitive compensation. This filing also details a lot of related party transactions. Due to the significant influence of the Dolan family, an agreement exists to outline how business is done between Madison Square Garden Entertainment Corporation, Sphere Entertainment, MSG Sports, and AMC Networks Incorporated. They have various service agreements, shared costs for things like aircraft and executive support. For example, the company recorded over $43 million in revenue from Sphere Entertainment related to services provided. This interconnectedness is essential to understand how these entities operate and where money flows. The aircraft arrangements are quite extensive. Multiple companies within the Dolan sphere share access to aircraft with costs allocated between them. For instance, Sphere Entertainment and MSG Sports paid the company over $11 million combined for aircraft use, while the company paid MSG Sports about $2.3 million. Mr. Dolan's personal aircraft and helicopter use is also shared among the company Sphere Entertainment and MSG Sports. These arrangements are complex and highlight the significant perks associated with top executive roles in such a closely connected corporate family. Finally, let's look at who owns the company. The Dolan family group holds about 64.3% of the combined voting power. James L. Dolan personally owns a notable portion of both Class A and Class B shares, giving him significant voting power. Ariel Investments, the Vanguard Group, and BlackRock are also significant Class A shareholders, indicating institutional investment alongside the family's control. This ownership structure is key to understanding the company's governance and strategic direction. So what is the verdict on Madison Square Garden Entertainment Corp? Their financial performance for the year ending June 2025 seems solid, showing good revenue and profits with notable successes like their Christmas Spectacular. The executive compensation is very high, especially for James L. Dolan, but it is tied to company performance and stock value, which is a positive sign. However, the substantial pay ratio and the complex web of related party transactions, especially concerning aircraft and shared services, warrant close attention from investors. It suggests a unique operational model that could present both efficiencies and potential conflicts of interest. The company's direction seems to be focused on leveraging its iconic venues and content to drive revenue, while maintaining strong relationships within the affiliated Dolan entities. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.